Hello from Trend Signal for a review of the data and events of the week beginning the 25th of September. We start Monday morning. Far East markets a bit mixed overnight. Nikkei responding to a weaker yen, whilst the Hang Seng got a bit lower as property stocks and some of the banks are faltering a bit. But the main talking point, without doubt, is the German election. The news is, just head to the FT, that Angela Merkel will be returned as the German Chancellor, with her CDU-CSU bloc receiving 32.7% of the vote, which on the surface seems all right, but it's actually in fact the worst result for the CDU-CSU bloc since 1949. The main rival to Merkel was the Social Democrats, or the SPD, who received 20.21% of the vote, and that's pretty much their worst election result ever. For example, back in the 1990s, the CDU, CSU and the SPD had 90% of the electoral vote. Now these two parties account for just over 53%. So the headlines, well, this particular headline is not about the AFD, but the bulk of the headlines are about the AFD and the fact that this Alternative for Germany party, I should say, which is the best translation, I believe, is this far-right party established 3 years ago that has gained quite a lot of support. The exit polls gave AFD just over 10%, and it looks like they're coming in with something on the order of about 12.6%. So Merkel is going to have to deal with the AFD and the Bundestag, which looks like they're going to have around 80 seats, which is quite a transformation. Merkel has got a task ahead of her of forming a coalition, or at least a workable coalition. She has the largest party. The SPD have said they're going to go into opposition. So the only possible combination for Merkel is an alliance with the FDP, the Democratic Party, and the Greens, and this is referred to as the Jamaica Alliance because of the colour of the various parties: black for the CSU, CDU, and then yellow for the FDP, and green for the Green Party. Market reaction fairly muted for the time being on Monday morning. Euro pairs weakened following the exit polls on Sunday night. Despite this move, I think the result, I don't think it's going to have any massive impact in the short term. Of course, this coalition needs to be put together by Merkel, and that can take some time, apparently. I'm not sure why. They talk about getting it sorted by mid-December. I think already German business is already asking and demanding that a government is formed as quickly as possible. I'm not sure that Merkel would delay it for any particular reason. But of course, longer term or medium to longer term, Merkel, whatever coalition she puts together, is going to be confronted by an opposition that is anti-immigration, anti-Islam, and to a large extent anti the Eurozone. And this comes at a time when Europe is seeking closer integration and where Macron, the newly installed Prime Minister in France, is going to be looking for some sort of decisive support from Germany, his European neighbour. So there's a question. FDP, one of the potential candidates for coalition with Merkel, is very pro-business and is very is a lot more sort of fiscally strict, and that's something that could impact the southern European members of the Eurozone and the European Union. So a lot of stuff in the end. I think that sort of the unknown quantity is causing the euro to weaken slightly Monday morning, not precipitously, but it's down about 80 pips from Friday night's close. So let's have a look at the data and events this week. It's really dominated by central bankers again. Just looking at the number of high impact events and data releases this week, there are, I think, 17, of which 10 of them relate to central bankers. So we are littered with various central bankers, from Kuroda on Monday from the Bank of Japan, Mario Draghi talking at 2 o'clock in the afternoon, We then have Yellen talking on Tuesday evening. These are all important. Unfortunately, we're all enthralled to the central bankers still, as we are contemplating, or the central bankers are contemplating removing these extreme monetary measures. Possible talk of QE tapering in the Eurozone, obviously the talk of the plan, as announced by the Fed last week, to reduce their massive balance sheet built up over the last 7 or 8 years. So it's all central bankers. So and included in that mix is the Reserve Bank of New Zealand have their monthly policy meeting this week as well on Wednesday, where we're expecting rates to be kept unchanged. There was talk at one stage of having looking for a rate rise, but I think the strength of the New Zealand dollar might have prevented that. But the real core data this week, apart from central bankers, is the durable goods orders in the United States. The core number we look at, plus 0.2%. Nothing to get too excited there. The main event of the week is undoubtedly on Thursday. I say undoubtedly. Well, it's an important marker for the final reading of the second quarter GDP in the United States. We've got a figure of 3%. We're not expecting any revision to it, although Forex Factory is talking 3.1%. We then on Thursday have Friday have the current account data for the UK at 9:30. Possible effect on obviously gilts and sterling. Then we bookend the week with 2 more central bankers talking, both Mario Draghi and Carney speaking. In fact, Carney speaking a couple of times. We've got the 20-year anniversary of the independence of the Bank of England. That was created by Gordon Brown of the Labour Party back in 1997, and they're going to be patting themselves on the back, I suspect, of what a great job they've done. Anyway, that's part of the celebrations and discussions taking place this week. But Mario Draghi talking at 3:15 in the afternoon on Friday, and Mr. Carney could mean for some interesting moves perhaps on Friday afternoon, as the markets do tend to take note of anything any of these central bankers say, because we still dance to their tune. So that's it for the whole week. Fairly thin on the ground, really, apart from all the central bankers. Thanks very much. All the best. Bye now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.